everyone. It is Noelle with Verivest, and today with me I have Scott Rerucha from Legacy Group Capital. Thanks for joining me today.
Thank you, Noel. Happy to be here.
Yeah, awesome. Okay, so let's get into it and tell me a little bit about your origin story, how you ended up to where you are today, and the beginnings or how Legacy Group Capital got to where it is.
Absolutely. Thank you. So where the story all starts is, I was born and raised in the greater Seattle area, graduated from college back at Seattle University, got a degree in finance, and I started my career in lending. And so I was doing residential and commercial lending, and that's kind of how I broke into the lending side and the real estate side of business. And from over the years, I have built two large mortgage banking operations where we funded residential real estate loans and turned around and sold them on the secondary market. I've also been involved in two startup banks, de novo banks that were built. And, we had commercial lending banks, and then we also built mortgage banking divisions within those banks. So I've been over the last, 30 years involved in all sorts of finance. And when you talk about real estate lending, whether it's bank financing, mortgage lending, private or hard money lending, that's what I've been doing my entire career. So at Legacy Group Capital, our experience is in lending, and then we've also been developing real estate ourselves over the past 20 plus years, sourcing really good real estate deals and developing those over time. So what we're experts in a couple things at Legacy Group Capital. One is lending. We know it. We know all platforms, and it's really valuable for what we do. And I know we'll talk a little bit about our real estate funds in a minute here, but it's important that we know how banks work, how mortgage lenders work, how hard money lenders work, because when it comes to the point when you're trying to execute on loans and how you underwrite loans or even how you sell off loans, we pretty much have that down. The same is true with real estate development, acquisition development. We've acquired millions of dollars of real estate. Probably each year we probably acquire $50+ million of real estate that we develop here, and we have teams that develop those. And so we're experts in developing real estate on the residential side, mostly only. And so we have a platform here where we're really, our expertise is in real estate and it's in lending. And we found a way here to marry together on the real estate side. If you can find good real estate deals, and you also understand lending really well, and you understand development, and if you have the capital, there's a lot of money that you can actually make on that platform. And so we've built this company called Legacy Group Capital, which is a private lending company, and we have a couple of real estate funds that we have been running ever since 2006. That does two things. One is it lends on residential real estate, so mostly development type of deals to mid-sized to small builders on projects. And then we also acquire real estate in the fund. And we develop it and sell it off for profit, and we share that profit with the folks that are in our fund. And so part of our business is really based on these two real estate funds. But we're really lucky because not only do we have this expertise in real estate and lending, we just happen to do 95% of our business in the greater Seattle area, which is a market that myself and all of our partners have been born and raised in this area. So we know real estate here really, really well. And when you lump all that together, Noel, it's been a really good recipe for success, even going back to 2006, 7, 8. Our funds were returning 12%, and we're happy to say that we have never, ever foreclosed on one piece of real estate in the entire time. And that's something that not many can actually say. and of course, we've had, we've participated with you guys in a lot of things, and you've kind of followed my career and what the company's done through times. But I think we have a really, really unique platform.
Yeah. Wow. That is awesome.
Yeah.
Okay, tell us a little bit more about how you source deal flow and what your acquisition strategy is.
Yeah. So we have what we call our real estate acquisition and development team. And there's about 7 of them on the team right now. And these are some folks that have expertise in the greater Seattle area, and they know zoning and they know city code. Inner city Seattle code is better than anybody. And so what happens is we've been in the lending realm for 30 years now. So we have a huge portfolio of real estate agents and mortgage people that refer deals to us all the time. Whether it's a real estate deal or a new loan to do, we have a huge network. But on sourcing of the deals, what will typically happen here is we have real estate agents that will bring us deals, and our real estate acquisition team, they're the ones that actually source the deals. They have the relationships with all these agents that really are kind of the high end, mostly sourcing development type of deals, and they'll bring us the deals, and our team will scrub those deals. They'll break them down. They'll even go as far as putting together a pro forma and best and highest use for that property. They'll put together site maps and everything of what can be built there. And then we break those deals down. And if they pencil for a development play, then Legacy will tie those deals up. And then once Legacy ties those deals up, we really do one or two things with them. Either our fund owns them and we move a deal into our fund and we hire a builder for a fee to build that thing out, and then we share profits with our investors. Or we turn around and we'll assign that deal to one of our local builders that borrows from us, and he'll take the deal over, and then we'll lend him the money. We'll do an acquisition loan for him to acquire it, and then we'll do a construction loan for him to build it out. And so it's kind of this one big happy family with agents, builders, and us being, the lender and also a business partner with these guys, in the whole process. But just so you know, we source deals in the Seattle market. Everything we do is in the greater Seattle area, near the core. Probably 70% of what we do is infill city of Seattle type of stuff, which is what we know so well. And I think one of the benefits that our investors get from what we do is, we're concentrated in an area. It just so happens Seattle's been a great market over the past 10 years. And, Google and Amazon and Microsoft and Costco and Boeing and all these companies that are here, our population growth just keeps going up. Still to this day, we do not have the inventory to support the demand. And that's why prices here have just kept climbing. So I think, Noel, we've been lucky because, not only do we have a good platform, but we're in a pretty good market too.
Yeah, absolutely. There's major companies in Seattle. Okay, so tell me about your investment philosophy. How do you determine whether a deal is worth doing or not?
Okay, so two things. We got to remember, we do two different things. We source deals for one, and then we also make loans for two. So I'm going to first address, what is a good loan and why we make it. And we're a little different than other private or hard money lenders. Most lenders out there will tell you a good deal that they're going to lend on means the collateral is good and it's worth a certain amount, because we all know how it works. You make a loan, and if somebody pays you, great. If they don't pay you, you're going to take the asset back, and you still need equity within that asset to recoup the difference. And as I told you earlier in this, we have never foreclosed on a property. Doesn't mean that we haven't had some deals to work out of, because we have. But what's important about that is that we have the ability, which is a lot different than banks or somebody else, because we're in real estate development, that if we have a deal that goes a little bit bad or we have a builder in trouble, we take the project over, we finish it ourselves, and we put it on the market and sell it. As opposed to a bank, boarding up the windows, holding it for a year or two, and then selling it off in a fire sale and taking a big loss. We don't do that. We kind of work with the builder to get out of those kinds of things. But what's really important is back to your question is what's a good loan as opposed to not a good loan. Number one thing that we look at is exit strategy. So when somebody brings a deal to us, we want to know how we're making a loan. We want to know how we're getting out of that loan. And so exit strategy is number one. And if somebody's story that they bring in doesn't make sense, I'm going to build this thing out and I'm going to sell these units for $1 million a unit. And we go, I don't think you're going to sell them for $1 million a unit. The exit strategy is not there. Sometimes we have people that are going to build things and hold them long term. Okay, if you build it, are you qualified to hold them long term? Can you get a loan to hold them long term? We're the guys that could tell you that. So number one, we love good collateral. Don't get me wrong. Collateral is very important. But it's exit strategy, and we feel a lot of our competition really do not focus on that as much as we do. That's kind of our number one. Back to the real estate side. So what makes a good real estate deal for us? Again, knowing this area in this location that we're in, we underwrite deals to a pro forma, and they have to meet certain metrics. We build in things into our performas that could take interest rate risk in the market. So if interest rates are going to be going up soon, we're going to, underwrite that like into our deals. And we have to, we have a certain margin that we underwrite to that we have to hit. But the thing is, what makes it, all the deals that we do, literally, like if you looked at our portfolio and you took Seattle and like about a 10-mile radius, we'd be all inside of that 10-mile radius. And so we're doing this house and one 5 doors down the road. And, we're building 4 townhomes down the road. And then we got 3 townhomes over here. And so the product is all very similar. So again, it makes it easy to underwrite because, appraised values. But for us, the area is critical because we know the market. And we know a lot of our competition that might do loans across the country in all different kinds of markets. And I could not underwrite a piece of real estate in Alabama because I would be the wrong guy to do that. Even if you showed me the whole thing on paper, I wouldn't know if it's a good deal or a bad deal. And so when, I think we stay really focused on our deals and our markets, and therefore, we know the numbers. We're always looking for value add in property or what you can do. And so because of our real estate acquisition team and their knowledge, like a couple of the guys on our team worked for the cities for years. They were the guys that were approving all the building permits. And so they know what people do and how you can get an extra unit on a lot. And it all comes down to, how many units can you get on a lot? What is each unit worth on a lot? And so again, that's how we break our real estate down. But our team is really good. To give you an example, we had a property that was listed on the market for 30 days that we just purchased a few days ago, and it had been sitting there for 30 days. Now, I can tell you, Noel, that out of all the properties we buy, 90% are off-market deals that come to us that are before they're listed. We very rarely buy a property that was listed because, of course, everybody's seen it and it's been bid up. But in this case, it was listed as a development property on the market on MLS, and it was listed as a 3-unit project because they had done their research and you could put 3 units on it. And so here was the price, right? And so we kind of looked at it because it was in our neck of the woods and we were doing some development around there. And our team broke it down and they figured out how you could rework that same exact property. You could get it permitted for a 5-unit site, not a 3-unit site. So we turned around and paid full price for that property. We ended up flipping it to a builder who we're making a loan to now, who's going to build out a 5-unit project. But nobody knew that you could do that except for our team. And so that's why, I think the quality of our underwriting is so high because we have these skilled folks that are, really working. And again, because we stay in our markets.
Yeah. Wow.
Yeah.
That's very interesting.
Yeah.
Okay. How do you kind of touched on this, but
Yeah.
How do you generate value once you have made your investment? So, I mean, with an example like you just kind of said, but how, yeah.
So a couple different ways. Again, when we look at a piece of real estate, and we're not doing like multifamily projects or something where you're going to go in and you're going to do value add stuff and things like that. That's not really our wheelhouse. Legacy does acquire some of that stuff, off the own, and we do some syndicated real estate stuff on that side. But really what we're looking for is, one of the big things in Seattle is, okay, if you like, I'll give you another example of a deal we just did the other day. So we've studied the code and we know what you can do. And so we found a house in the heart of Seattle that was a 2,400 square foot home that was built in 1960 and pretty good bones to the house. And when we went and looked at it, because it was on a decent sized lot, we looked at it and it had a basement, and the basement had like a 9-foot ceiling in the basement. And so we figured we could take this house, make it really a 2-unit project, a downstairs and upstairs, because when you have a 9-foot ceiling in a basement, it's like real living space. And we could redo the basement. And then what we know how to do is we call them backyard deals here in Seattle, where the zoning has changed, where you're allowed to put ADUs and detached ADUs both in backyards. And we've figured a way where, because a lot of times people say, I've got a house, I've got a big enough lot for an ADU in the back, right? Or a detached ADU in the back. And so what we've learned is on some of these properties, because we've studied the zoning, you can actually put an ADU and a DADU both in a backyard. And so as long as you attach one to the house, you can have a separate one too. So now we're talking about 4 units on one property. And anybody else looking at that property is thinking maybe you can get an ADU in the back and maybe you could finish off the basement and make it a separate unit. But we, again, just got 4 units where everyone else thinks maybe you can only get 3. And that's just from the knowledge part of what we do. And that's how you find good deals, because the Seattle market is very competitive. And it's hard to find good deals right now. It's been hard the last 2 or 3 years. If you talk to people from Seattle, they'll say everything's overpriced and you can't find good deals. But yet we've been doing it, but it's not easy.
Yeah, totally.
Yeah.
Okay, so who in your company are the key players that allow you to execute your strategy?
Okay, perfect. So first of all, there's me, and I serve as CEO of the company, and I was one of the main founders of the business. Back in 2006 is when we started this entity. And, my job really is to make sure everything is running good here. I work with a lot of the investors that we bring in. So when we're selling our investment platform, I'm usually the one that is talking to them or talking to folks like yourself about what we do on the investment side. And so, I'm more keeping everything going and driving sales and investment in. Another key partner that's been with me for like 20 years now, Brent Ely. He is our fund manager. And Brent is at his desk every day monitoring our funds and what our loans are and what our pieces of real estate are that we have within our 2 real estate funds that we have here at Legacy Group Capital. And so Brent's watching, basically he's the watchdog, and he's going over all the deals as they flow in. And him and myself are both on the loan committee for approving loans. But Brent's been in lending for 30 years as well as me, and he's seen every kind of loan. And, Brent, the thing I appreciate about Brent is he's a great partner to have because he's very conservative. He's usually never seen a deal he really likes. We always have to convince him, and which is great because I'm more the sales guy. I'm more the optimist. He's more of the no, this isn't very good. And so that's a good fit. But he's the watch, like he's watching everything on a daily basis. Then we have another partner. The other key partner is Chris Gurgen. Chris has been a very successful real estate developer in the area for the past 15 years. And Chris actually came to work for me 20 years ago in the lending side of things. And I kind of brought him up through that. And then, one day Chris came to me and told me, this lending thing is great and I'm doing really well, but I want to go out and develop real estate and make a lot of money. And so he went out on his own, and we ended up being his lender at that point. And we lent to him for a number of years. And I think over 5 years, he acquired over $200 million in real estate and became a pretty big player in Seattle market. Since that time, Chris came back and, he had figured out how to source some of the best deals in Seattle. And he decided to come back and join the company and be a part owner and bring his deal flow with him in here. And so that's why he's running the deal flow side. And Chris is a super hard worker, but he's a guy that will be wide awake at 4:30 in the morning, like studying Seattle city code, land use code, and what's going on. So different than me and you, Noel. We don't do that, but that's Chris. And so anyways, he is an expert and his team is too. And so the deals that they source and how we underwrite them, there's a huge process, but that's what's kept us very, very safe. We're talking about 13 years of having our funds with no investor losses. We don't have one delinquent loan right now. We have $170 million out on the street right now with no delinquencies, even through all this kind of unrest and this time and everything. So we're pretty proud of that.
You should be. That is awesome.
Yeah.
Oh my goodness. Well, thank you so much, Scott. It was so nice to learn more about Legacy Group Capital.
Yeah.
Thanks for joining me.